Devang Mehta as well joins into the show right now. Devang, hi, afternoon. Just looking at the weakness within IT and wondering whether we are close to anywhere a bottom or not, and whether you would begin to buy the decline in IT just yet.
Afternoon, Aisha. Thanks for having me on the show. I think yes, the answer should be yes. My sense is pessimism leads to more pessimism, and right now, what we are looking across, if you look at the mother market, Nasdaq, from which I think the IT borrows a lot of its trends from. Probably we have seen a very sharp correction, more than 20% correction. People talking about bear market for at least IT businesses in India also. The likes of Infosys to TCS to Tech Mahindra to Mindtree to even L&T Technologies and all these stocks correcting anywhere between 20 to 30, 35, 40%. My sense is, yes, well, you can talk about everything and anything. There can be some valuation readjustment which is happening to equity valuations, and that too for IT valuations, which were sort of in hindsight larger than what it should be. The sense one gets here is the margin missed by say 100 basis points or 150 basis points, and a little bit of a weaker guidance in terms of margins at least not expanding, and attrition has sort of taken its toll on these businesses. I think productivity enhancement, efficiency, digital work from home, all these hybrid cultures would make a lot of these IT companies very attractive in terms of Indian exports also. I guess there is a big competitive edge for a lot of these large companies as well. So my sense is one should probably start picking and choosing. Yes, it will not be a linear ride for all these businesses. Probably in the next couple of quarters, you will get good opportunities. So yes, it's time to start accumulating some of these businesses.
Okay, what's the view when it comes to the entire metals basket? A lot of these stocks have been clobbered quite badly in the trading sessions that we've seen, and we had the government as well just recently imposing those export duty on iron ore and steel intermediaries. A lot of brokerages downgraded the stocks. Devang, are you changing the outlook when it comes to the metals basket on the back of this trigger?
Yes, I think at the expense of being repetitive on a last couple of shows on your channel, we've been very vocal in saying that it's time to probably book out of certain global cyclicals, and of course more so metals. They had a dream run. So stocks like Tata Steel, just giving an example, has started at the rally at 150, 200 rupees, and probably the stock touched a high of 1300, 1400 rupees. Yes, it's a clear long-term cyclical in a way. It's a deep cyclical, if I would mention it that way. You never can time both tops and bottoms in the cyclical businesses. And if you are making 5x, 6x of what you have made, probably greed can't last more, and you need to book profits somewhere over there. Again, what the Indian government did at this point to sort of protect the way forward, or rather curb inflation, also positively will impact a lot of companies which were worried about the raw material costs as well. So my sense is, yes, it's a double-edged sword in a way. Seems like the metal stocks, the rally, the best part of the rally should be over. As I said, very difficult to time businesses which are dependent on global, I can say, data or macro data. But yes, metal is one sector which probably we have been avoiding since a long time, and I would say that rally probably seems to be somewhere close to the end.
On Welspun Corp, down 9% in trade. Last week, it was one of the winners on the back of that order that it had bagged, the pipe company. And Adani Enterprises as well at 2073. Milan, that question was for you. Welspun Corp, Adani Enterprises.
See, going forward, if you see Nifty is showing sign of weakness, so this will propel the selling pressure in the stocks. Even the breadth is becoming thinner and thinner, and you could see the advanced decline ratio is not in our favor. So we are of the opinion that yes, even the mid cap and the small cap has started its downward journey. So this counters like Adani Enterprises, they can also come down by 6 to 8%. So be careful at this juncture, because Nifty for long days it has not broken 16,100 level. Now today we have broken this convincingly, and we are of the opinion that it can still slide further towards sub 16,000 levels, and even go to 15,800 level. So be cautious at this current level.
Kunal, do you think we'll break 16,000 on the downside, given the way that we're moving and this accelerated fall in the broader market sectors like IT and now even the Nifty Bank?
So, the last half an hour, last 1 hour, we've gone back into that same repetitive phenomena where in the second half of the day, we are succumbed towards selling pressure across large cap names. Whether we break below the 16,000 mark or not, I think more important than that is look at the data points of what the markets have shown today. The mid caps and small caps have taken a lot of beating for themselves today. That generally intensifies the pain for the market participants, because when you have majority of the stocks and the portfolios are generally bent towards mid caps, some of them towards even small caps, and they are the ones which are actually feeling the pain today as well. The volatility index is still about 25 mark, and that I believe is a lot more hurting point for the markets, because till the time we trade above the 25 mark, there is always a higher possibility that the index can get into a much more sharper correction. So looking at these two data points, I would be a bit circumspect on the market. But then we fall back to the big range on the index, that 15,700, 16,400 has been the broad range for the Nifty. We may continue to amble into this 600, 700 point range on the Nifty, but bearish positions should be initiated only if we break below that 15,700, 750 support, which has been established quite well over the last 2 weeks of the market action.
Right. Okay, I'm just looking at some of the other active buzzers in trade. So there's a Concor, which is of course up 6.5% right now. There's Balkrishna Industries. There's NTPC, which is currently up about 3.5%. HDFC Life, which is up 3%. And within the large caps, there's SBI Life, HDFC Life, HDFC, ONGC, Kotak Bank, financials largely, which are actually holding up, and so is Bhartiya, Britannia, odd kind of names as well. Milind, just tracking the trend from last week, I wanted to understand what happens to the strength in autos. It seemed like sporadic. There are a few odd Balkrishna Industries kind of names which are still supportive and still holding out well. But what happens next? What do you read on the charts?
See, no doubt if Nifty is cracking today, but Bank Nifty has shown some resilience going forward. Even auto sector, which is trading sideways, and now Balkrishna Industry. If you see, Balkrishna Industry has given a strong flag breakout type and with a higher volume. Now, even the close, now we are nearing to the close, and Balkrishna is closing at the highest point of the day. So I expect this counter to test further levels of 2195, 2258 levels. So one should remain positive on this counter.
Right. Kunal, you as well, had been discussing autos. What happens to a Tata Motors, which I recall was one of your top ideas within autos?
So yeah, I think the auto stocks are getting into now a phase where the indices are getting into a consolidation as such. There are no major reversal patterns. So even though the auto index is down today, 0.5%, I think 0.9% or 1% today, but it's not gone through a very sharp reversal on the downside, because when you look at the last 2 weeks of price performance on the Nifty Auto Index, I think we made a low of 10,090, 10,100 on the auto index, and then from there we rallied up to almost 11,200, 300 on the auto index. So that's a decent rally of 10%. From those highs of 11,200, we have retraced to 11,050, 60 on the auto index. So it's a meager 100, 150 point dip on the dollar index, on the auto index. No major signs of a reversal, at least as of now. So would maintain the bullish stance unless we break below 10,700, 750 mark on the auto index. That's where I believe the pain could get a bit more accelerated, and even the auto stocks can start to participate on the downside. But till the time that doesn't happen, we'll maintain the bullish stance.
Devang, it's been a busy couple of weeks for the Adani group of companies, with the acquisition of Wholesome, that's India operations, that's Ambuja, ACC, then they created the healthcare subsidiary as well, Adani Health Ventures. So clearly they've been on a very explosive growth trajectory. What's your view on, some of the select businesses within this space, the very hectic pace at which the company as well has been growing from, the stock market perspective?
Unfortunately, one do not track the group stocks. In fact, don't have coverage on those. But yes, just to answer the question, I think there is clearly a lot of competition which is emerging into the markets, into the marketplace, as well as a lot of the sectors that you talked about, be it cement, be it medical diagnostics. We have seen a lot of companies coming into price wars, a lot of companies getting expanding, or rather doing greenfield or brownfield projects. Sort of that shows that there is going to be certain capex which is going to be in the economy, and the demand is going to be good for the next 3-5 years. So I take it as actually a macro positive when big groups go on an expansion spree, and they have all the confidence in the world to sort of raise debt also and go into this type of an expansion spree, which shows that there is enough money to be made on the table for a lot of these businesses. Of course, not commenting about any specific group, but a lot of these companies where in fact the market is getting more from unorganized to organized is also a huge opportunity for all these new incumbents.
Let's hear it out then from some of the market experts that we've been interacting with. Manishi Ray Chaudhary believes that another leg of correction could be on the cards, while Manish Gunvani is of the view that there's no case right now for being overweight when it comes to the IT sector. And Sandeep Tandon of Quant Mutual Funds is of the view that banks are going to outperform.
In case of Indian banks, particularly the private sector banks, there's also this, this phenomenon of asset quality improving. We might also see a slight improvement in credit growth, if not this year, possibly in the first half of next year. So I would, definitely pick select private sector banks as the first choice. Second, we continue to remain positive on the sectors which are beneficiaries of currency depreciation, currency moderation across Asia. Indian IT services, some of the Indian pharmaceutical stocks fit that bill. And third, the whole energy and fuel complex, where we are playing both the conglomerates and the pure play energy explorers. So these are the sectors I would continue to pick in the event of a significant correction. I would possibly stay away from the consumers, particularly consumer discretionaries, who would likely continue to face margin pressure over the foreseeable time horizon as a consequence of the input costs being inadequately passed on.
Obviously, in terms of valuation multiples, IT stocks are expensive. Maybe as a near-term currency hedge, you can have a bit of that. Because I also feel that while the dollar may weaken, I think the Indian rupee has outperformed a lot of emerging market currencies and non-dollar developed currencies. So whether it is, Korean won or Swiss franc or Japanese yen, they have fallen a lot versus the dollar, whereas Indian rupee has not, even yuan has fallen recently. So more as a bit of a hedge, but I find it very difficult to make a case for being overweight IT.
So let me put this way, if you ask me, banking sector relative to IT will be outperformer, answer is clearly yes, that banks will outperform the IT. Then the question comes, within the banking, what should be the outperformers? So very clearly, PSU as a team should outperform the private sector. So given the background that we're talking about, the growth sector has peaked out in terms of valuation multiple. This is the value theme which will play out for a decade perspective. Then I would like to play value in that basket. So all PSU banks and their large private public sector banks which qualify, they're grossly under-owned and currently quoting below the book or maybe closer to the book. Those are the names which one should capitalize.
Okay, so those are some fundamental views coming your way. But Devang, wanted your take regarding the carnage that we are seeing in the paint sector. Do you think this is a bit of overreaction, a 8% cut on Asian paints, and even broader market names like Berger Paints, Indigo Paints, they're all coming under quite a bit of pressure now?
I think this clearly indicates what sentiment the market is going through. I guess there has been probably we are somewhere close to the end of the result season for the last quarter, for the fourth quarter of last year. My sense is here that you will see a string of downgrades, which you are already seeing for IT sector. A couple of brokerage houses already did that for IT, and today we had two different contradicting reports talking about the prospect of the paint sector. I think the sense one gets here is it's a little too overdone. A lot of these companies who have high market share are oligopolistic in nature, and they have very good pricing power, which we have seen taking 20-25% type of price hikes in the last 4-5 months is not a joke. And the distribution chain that these companies enjoy is going to be extremely difficult, or an entry barrier for a lot of this other incumbents who are joining to join the bandwagon. So yes, there is a lot of, as I said, unorganized market is still a larger share, which probably would get a little more organized if new players enter this stream. But I don't see a big threat to the oligopolistic or the duopolistic behavior with a lot of these companies go through. So my sense is yes, as one looks at this type of volatility, one knows that in the last 10-15 years, every time you have sort of bought Asian Paints or companies like this, which are sort of oligopolistic, you have made good money. So this correction should be utilized as an opportunity. Yes, valuation correction would happen, but there can be 5-7%, which anybody can go wrong. But yes, these are the opportunities one should sort of cash in adversity.
The dips that we can see on counters like Asian Paints should be used as a buying opportunity, given these stocks have been multi-year wealth generators as well. But Devang, what's your take regarding some of the recent government measures that we have seen? Suddenly there's an export ban on sugar, there is a wheat ban, there are some steel levies coming in, and this just adds to a bit of regulatory risk for a lot of these companies. What should one do at this point of time? Should you not look at it at all, stay away from these sectors? And if you're holding these counters, should one exit even at a loss?
I think a very, very relevant question, and that is why we have a investment statement which generally says what not to buy. It's very important on the street to have a view on what not to buy, and that's why wherever there is going to be a government interference, rightly so, or government regulations which would sort of hamper the prospects of a sector or a company, respective company, I guess we don't take a sort of material positions over there, or in fact I can say we don't have it in our eye list or a watch list as well. As I said in my last answer about global cyclicals, all these companies also go through a lot of deep cyclicality. So sugar, tea or coffee depend on a lot of prospects about how the rains would pan out, or how the imports or exports from Brazil would pan out, and a lot of international dependence when you talk about this type of sugar companies, ethanol blending, all such stories. Yes, they had a dream run. As I said, all the cyclicals in the last 1.5 years had a dream run. As I said, there will always be gravity to the proceedings. So my sense is, yes, you should probably not be in the sectors where there will be a lot of government regulation or interference, as inflation would be the curbing inflation would be the need of the hour. A lot of stocks have gone through corrections. We were just discussing about a lot of these businesses. I think there is a lot of opportunity and over there, rather than getting into sectors which probably bore the brunt of regulatory environment change.
Okay. Media, by the way, is clobbered out of shape in trade. It's particularly TV today. That stock's down about 10%. Network 18, 5%. TV 18 broadcast. Z Entertainment, DB Corp, and then even the stocks like Inox Leisure, PVR. In fact, put your finger on any of these names, Jagran, Sun TV, they're all quite badly bruised in trade this afternoon. Kunal, let's get in a word on the charts.
So PVR, I think yesterday also had managed to see a corrective phase for itself. It was down some 6%, 7% yesterday, and today it's seeing yet another corrective move for itself. There is no major change of trend on the long-term charts for PVR, but yeah, I think the last 2-3 days we've seen that the mid-cap in the market has gotten to a lot more sharper correction for itself. So maybe PVR could be at the brunt of some more selling pressure. The 200 DMA for the stock is at 1575, 1580. So possibly another 50-60 point correction from current levels could not be ruled out. But the bigger concern, I think, from the media pack is the turn in Z Entertainment. That, I think, has confirmed a big breakdown on the charts, breaking below its major support. So earlier the support was 250, then 240 for Z Entertainment, and the stock has broken below both of these levels today quite convincingly. So I think that could be calling in for a sharp reversal on the downside. So yes, the basket looks a bit more fragile, but then I think Z Entertainment is one of the stock which looks much more weaker in that media basket.
Yeah, and Z Entertainment incidentally going to come out with its numbers tomorrow. Speaking of earnings come tomorrow, it's also going to be the turn of Hindalco, Page Industries, something like NMDC, as well as Cummins. But today, Devang, the street will closely be watching out for Interglobe Aviation's numbers. Anything that you're expecting or you'd like to hear from the management?
I think the important part would be how they gain market share. While there is going to be enough competition on the table, one hears about Jet Airways getting operational and a couple of other airlines, low-cost airlines also coming on the annual in the next couple of quarters. My sense is that the trend of the crude prices, if not a big hurt in the last quarter, would probably come and hurt in the first quarter of this financial year. Again, make no mistake, the operational cost, a lot of operational cost depends upon the way of how aviation turbine fuel prices turn out to be. The compensated part would be here that how the demand has sort of flared up. There is revenge tourism, revenge travel. I've seen tickets in certain sectors, a very 2-hour flight locally getting charged at 20,000 one way and 40,000 two ways, just 15-20 days before the travel. So my sense is, yes, the airlines would probably make a lot of money in the next 6 months, 1 year. Having said that, as I said, it's also a sector which goes through deep cyclicality. So we don't buy it for our clients, or we don't have in our portfolios. So one should probably tread with caution. But yes, I think for the next 6 months, 1 year, travel tourism as an industry should do well on the back of demand coming back.
Sure. Devang, the intriguing thing about delivery was that much unlike the recently listed or IPO plays, this one actually, irrespective of having a very solid peer set, managed to break ground pretty smartly. Wanted to understand what is it that you are making of this entire space right now of logistics, getting a bump up because of e-commerce. So while they may not make money, but these kind of business models surely still do, and where delivery stands within the pack of Gati, etc.
I think, yes, this is one segment, logistics, which one should look at with a lot of interest. As I say, e-commerce is about to gain, and people probably in the last 2-3 years, a lot of people who are not sort of addicts of doing online bookings also have sort of started to do that. In the value chain, a lot of warehouses have sort of benefited, and also a lot of this courier companies or companies which operate in the logistics space also tend to benefit out of this. Not track delivery very, very closely, so won't be able to comment on specifics of that. But yes, this segment seriously looks interesting, as this globally this has been the phenomenon where your online shoppers, the community keeps on increasing and keeps on sort of getting more as the offers get more and more lucrative. So this side of the business can't be ignored. Companies who probably have a good business model, who keep costs under control, will tend to benefit as we go forward.